Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on IndusInd Bank. Our analyst maintains buy rating on IndusInd Bank with a price target of Rs 1850. The near-term business outlook remains comfortable except for the elevated cost ratios. The ability to manage NIMs in the current environment along with being a key beneficiary in the interest rate reversal cycle would keep the sentiment positive. Key focus is on strengthening the liability franchise and delivering sustained healthy growth. Return ratios have reasonable support from lower credit cost at this stage of the cycle. Valuation are attractive given the ROA trajectory and stable outlook. Key monitorable in near term is promoter awaiting approval from the RBI to increase their stake. The stock has outperformed the broader indices in last 1 year and it currently trades at 1.6 times its FY25 and 1.4 times its FY26 core book value estimates. Next we cover UltraTech Cement. Our analyst has a buy rating on UltraTech with a price target of Rs 11,300. Considering its long-term growth potential led by structural demand drivers, it is expected to benefit from healthy cement demand during Q4 of FY24 and contained operating cost. Although 6 to 7% quarter-on-quarter correction in cement prices may lead to sequential decline in EBITDA per ton, it is poised to outpace industry demand growth rates during FY24 and FY25, while cost curve is expected to trade lower, aided by lower P&F cost. Its Phase 2 expansion of 24.4 MTPA, Phase 3 expansion of 21.9 MTPA, along with acquisition of 10.75 MTPA Kesoram's acquisition would take its total cement capacity to 195.4 MTPA from current 138.4 MTPA.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.